Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. All right, so you're a buy and hold investor. Can you still buy a rental property in the U.S. today? Look, at current mortgage rates, it's tougher. It's much tougher than it used to be. Can you actually make money as a buy and hold investor if you buy a property? Right now, the prices, the mortgage rates, let's be honest, a lot of investors are struggling to make the numbers work. Home prices have gone up significantly. Mortgage rates have doubled. Insurance and taxes have surged. It's getting real hard to get into the buy and hold investment thesis these days. But where can you still find opportunity? And what type of opportunity are you actually buying when you look for that, right? So there's two different types of investment markets in the U.S. There's cash flow markets where purchase prices may be a bit lower, in my opinion. Rents are strong. And that's where cap rates could look pretty good. Now, there's other markets that are more for appreciation. Appreciation markets, prices move higher, quicker over time. Cash flow could be weaker, though, as a buy and hold investment, but long-term appreciation could be much stronger over time. So let's look at two kind of examples, but first, let's look at the metrics. So I'm going to look at a couple cities here, but remember, when we say gross rent yield, that's the annual rent divided by the purchase price. And when I say cap rate, I'm talking about the income you receive from the rental property after expenses divided by the purchase price. That's the formula. All right, so what happens after everything? I want to look at a place like Cleveland. Approximate numbers now. I am being very generic with these numbers. And I'm talking about Cleveland as a whole. The median home price right now in Cleveland is $230,000. The estimated monthly rent in Cleveland is right around $1,900 a month. So your gross annual rent comes out to $22,800 a year. And your gross rent yield, therefore, is right around 9-10%. That's pretty good. But we got to calculate your cap rate because you do have taxes, you've got repairs, you've got management fees, maybe you've got vacancy rates, and that would lower you down to probably around a 6 to 7% cap rate for Cleveland, Ohio. Again, that's not bad in today's market, but what if you're financing, right? So if you're an investor and let's say you're like, I want to get into this, I'm going to put 20% down because I got some money and I'm going to finance the rest of it around the current mortgage rates, numbers change quite a bit. You might still break even, you might even slightly cash flow, but that scenario is getting a lot harder in the U.S. today at 20% down. In most cases, you probably need closer to 30% down. But Cleveland's a place where I think you could potentially do it. All right, but Cleveland, remember, it's a market that will appreciate slower over time, right? You might get better monthly cash flow, but what about your long-term appreciation? Will it be as good as, say, this other example where you might get a lower cap rate, but you get more of appreciation? That's an appreciation market like a Tampa, Florida, right? Where the median home price is around almost $500,000. Estimated monthly rent in Tampa, you can get almost $3,000. So gross rent yield, 6 or 7%, much lower than Cleveland. Estimated cap rate, all the way down to 4, maybe 5%. Pretty low. Tampa's not great for that. And insurance, taxes, HOA fees, I'm telling you, it's higher than it's ever been. In Florida in general, and Tampa is no stranger to that. And if you try to finance a property in Tampa, and most, if not, a large percentage, how about that, will not cash flow well with financing. Like I said, property taxes, insurance, maintenance, vacancies. Maintenance alone, insurance alone takes a big chunk out of your profit there. But why do investors still buy in Tampa? Because they still do, right? Because they're looking for stronger long-term population growth to happen there. They're looking for stronger migration trends. They know there's a story going on in the west coast of Florida, in Tampa. It's growing, it's booming, and it's got a stronger long-term appreciation potential than, say, Cleveland might, right? So a lot of investors come in and go, look, I'll take the weaker cash flow today because I want that future appreciation. And that's really why I'm investing. Not necessarily to buy and hold for rental income, but to buy and hold for that appreciation over time. Now, it really depends on what kind of investor you are. What are you looking for? Monthly cash flow? Okay, those Midwest markets might look attractive these days, right? Cleveland, Indianapolis, lower price cities, strong rent demand, but long-term appreciation, Sun Belt looks like the growth markets, right? Tennessee, North Carolina starting to look good. Tampa still looks good. Miami still looks good too. Now, why is it a lot harder today? Because, well, we're higher rates. We talked about this, right? Rates are much higher. Insurance costs, taxes, all of that, much, much higher. All right. Now, remember that the hottest market is not always the best investment market. Okay. You may look and see, well, Miami looks like a hot market. Tampa, all these, Austin and all that. It doesn't mean it's a great investment right now. If you're looking for that buy and hold, it may take a while to profit right now in some of those markets. And you have to think about this as you don't want to chase hype or chase headlines. You want to, investing is math. At the end of the day, investing, if the numbers don't make sense and you're thinking about this for cash flow, then you're going to be hit pretty hard with realizing it's not going to work out for you. All right. Now, in today's market, the best investment property may not be where everyone wants to live. It may be where the numbers still work. Don't follow that hype. If you're looking to become a buy and hold investor right now, the question isn't just, will this market go up? The question is, at today's rates and today's holding costs, does the investment actually cash flow? What's my cap rate? Does it actually work for me? That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.